The problem is that this action here is down money supply while we have been rallying. And that again is problematic. That tells me there's something brewing here in the market.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin and Ethereum. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Markets have ripped, and we had the flood of ETF applications, and then today, Gensler kind of gave them a little bit of a decoy or a little bit of a slap down there. So what are you looking at? What's going on?
Yeah, so I mean, it was interesting. I'm not entirely surprised. It almost seems like it would be too easy for all of these big companies just to file for the ETFs on the spot market and just get right through. So I think the biggest takeaway is initially we saw Bitcoin fall sharply, right? It went from around 31,000 back to 29,500. But it's kind of come back to settle in that $30,000 range. And I think what we take away from this is that it's not horrible news. It's not great news, but it's not horrible. I think the term used was inadequate, right? So that doesn't mean they're not shutting it down. They're saying we need more information, or we need you to do more due diligence, or give us whatever we need. And then it seems like they're open at least to it getting through. I think also, I mean, from what I know with at least the legalities between the SEC and Coinbase, they're filing not with Bitcoin specifically, it's with other things. So it's with the altcoins, right? The ones that they're claiming are securities. So maybe that also leaves a small door open. I think, honestly, I always look at price action, and price action has been pretty muted, right? I mean, you had the initial reaction, and let me show my chart here, but we had the initial reaction, and let me go to the intraday 10-minute chart. Here was that news hitting the market. Again, we were up right against that resistance at 31,000 on the intraday. We flushed down to support, and then we've kind of just trailed off in this lower area here. And the other thing that I thought was interesting too is that today was the day that altcoins were starting to pump. And it was amazing how that just took a lot of the wind out of the sails of the altcoins. Like, so if we go to the daily chart and you look at Cardano, for instance, Cardano was up into resistance earlier today, looking like it was trying to break out and go to this next level of 33, 34 cents. And that news just slammed it right down. So by hitting back at Bitcoin and the ETFs, they kind of took out the wind from behind the sails of the altcoins as well. Longer term, there's no doubt that having spot ETFs that are brought to the market by Fidelity or by BlackRock, that's a positive. That's a net positive. But you're right. I mean, we're talking about a year to a year and a half away. The crypto market barely can focus on a week to 2 weeks away. And so how do you, when you talk to crypto investors, when this is so far away, do they stick around? What if, and again, this is my bear case, right, for Bitcoin. If Bitcoin is going to revisit its lows, it's not going to, in my opinion, have to do with a new fraud, a new this or new that. Even with Binance, the markets has kind of digested the chance that what the SEC has claimed is true. But the bigger question is, if you look at what's going on with the stock market and just the relentless upside action we've been seeing in certain stocks, let's say we do all of a sudden get a corrective move in stocks of 10, 20, 30%. How does that then affect Bitcoin and the crypto markets if you see a run for safety? Because I don't think at this point yet we have Bitcoin is certainly not a safe haven yet. All right, we saw a little bit glimpse of that during the banking crisis earlier this year, but it's really still been trading as a risk asset.
But all that to say, let's assume we do get an approval and then the market tanks. Do you think Bitcoin can hold up at that point?
And to me, that's where I personally don't think so, because again, if there's one thing, the COVID tank, and again, that was a black swan event. It caught everyone off guard. But one of the things that I remember vividly from that period, as well as past really panicky sell periods, is that even gold sells off for short amounts of time. And so I think people have to realize that even if you get to be that panicked market that everything is going to dump, it's people just freak out and they just dump all asset prices, even if it's something like gold, which is a safe haven, at least in the short run. So that kind of opens the door for maybe a buying opportunity if that happens, even if a spot ETF has been approved at that point. And let's not forget that the top on the last cycle was exactly when the futures ETF got approved. So here we see that certainly it wasn't like all of a sudden that was the new bull market. That was actually the top of the bull market when that happened.
Right, right. And this where we're dealing with now, this market could play out for another year before we, fully understand a direction, whether we're still in a bear market, whether we've claimed a new bull market. I mean, it could range for a year before we even know where we're headed.
Yeah. And I think one of the things, I mean, so there's some things that I'm seeing in these charts. And so this is the 10-year yield chart. And what we had was a wedge pattern that was a bullish wedge pattern. We broke out yesterday with that solid economic news that we got, the GDP revision to 2%. And then today we had the slightly better than expected PCE number, which kind of brought back in from this next resistance level, which is what to be expected, right? We broke out of the first one, but the second one hasn't been tested yet. It has to pull back. But this is the key, is that are we going to see a bigger breakout on yields if this channel, see this beautiful, this is actually a bull channel. In fact, it's very, very similar to what we've seen on gold play out over the last 4 years or so, the same pattern formation. And if this starts to break above this line, you at least are headed back to 410 and then maybe the highs of 436 on the 10-year. And the question is, the higher rates go, what do risk assets do? That's the question I have. And I think also what's concerning to me is the divergences that we're starting to see. So if you look historically at the 2-year versus the stock market or the 10-year versus, there's a very clear kind of coordination between what goes on there as well as the markets. And we've seen a divergence over the last, so long, let's say the last 6 months in the market with these signals. So something weird is going on here, something that is unsustainable if you look historically at the markets and at these other signals. By the way, another signal that I pointed out recently was M2 money supply. So M2 follows like every up and down in M2. Well, there's actually honestly been no downs until recently in M2, but you can see the vertical nature of M2 as it climbs. And in fact, let me see if I can bring this up here so we can all kind of take a look. But as M2 climbs, the market has always climbed. And let me go to the S&P 500. And then let's bring up the M2 money supply.
Yep.
So what we can see here is if we go, and I can zoom, and I want to zoom out for everyone to see this, is that if you coordinate this with COVID, there's COVID, and there's your money supply increase, and then look at the run as money supply goes up, then look as money supply flattens and starts to decline, we have this. The problem is that this action here is down money supply while we have been rallying. And that, again, is problematic. That tells me there's something brewing here in the markets. And it may not play out for the next 6 months. We don't know. But at some point, there has to be a revision back in the markets or in money supply to some central point. I think, at least from my perspective, the divergence can't last forever. At some point, the markets have to come back in. But I do think that there was so much money on the sidelines because investors were so worried about a hard landing, and now everyone feels like they missed the boat, that they're all chasing, and that's creating this divergence where people are saying, hey, listen, we're going to have this beautiful soft landing, everything's going to come up roses, and so they're willing to kind of chase stock prices up at these levels.
Let's take a look at gold. On the double top, triple top theory. So, a triple top is generally bearish, right? But you're thinking gold's going to break out?
Yeah, so usually with triple tops, so double tops are the most bearish, right? Double tops, you get the biggest pullbacks. Triple tops, you usually get more shallow pullbacks and then a breakout. So for me, it's the triple top is okay, because essentially it's what you're doing is you're hammering on a doorway. Here the doorway's forming. Here you try to break it down. It's too hard the first hit. Here's the second hit over here. Now it's getting weakened. The doorway is weakened. Usually by the third or the fourth hit of that line, it can break out. What I liked about this chart and why I actually picked up some GDX in the Verified Investing Alerts trade signal service at In the Money Stocks, and we picked up GLD, is because this pivot to this pivot was a classic retrace to what I call the scene of the crime. It broke out, hit double top and retraced right to that. So that is to me, that's a bullish setup where I would expect this now to climb back to those highs. Yeah, it's a nice chart. And again, one thing about gold is it's not a sexy thing in terms of it's not going to make you a 10x or a 5x in a short amount of time like a crypto or maybe even a stock can, but it also takes risk away to the downside. You're not really worried about gold dropping 30, 40, 50% on you.